Hello dear traders, let us review the economic events of the past week. Oil futures prices were rising on Monday with the start of peak demand winter season. Nevertheless, outlook for oil remains bearish with demand expected to be lower due to global economic slowdown. Analysts at Goldman Sachs Investment Bank estimate $20 oil is possible in 2016. Expected increase of crude oil exports from Iran after international sanctions are lifted is another bearish factor for oil prices. European stock market indexes closed lower on Monday, dragged down by falling energy shares. Stoxx Europe 600 index ended 1.1% lower. Germany's DAX 30 fell 1%. The US stocks ended higher for second season on Tuesday. S&P 500 added 0.9% as all 10 major sectors closed in positive territory, led by consumer staples, energy and industrial stocks. In economic news, the GDP third quarter annual growth rate was revised downward to 2% from a previous estimate of 2.1%, supported by strong consumer and business spending while inventory investment fell. Existing home sales posted a 10.5% decline in November, the sharpest drop in 5 years. Nikkei fell 0.5% on Wednesday as yen strengthened against the dollar in thin trade. Japanese government approved a record budget for 2016 premised on higher growth and tax revenues. Gold was advancing while the dollar index was edging lower. A weaker dollar bolsters demand for dollar-denominated commodities. However, the outlook for gold, which doesn't pay interest income, remains bearish after the U.S. Federal Reserve announced the start of monetary tightening and hiked the interest rate by 25 basis points last week, indicating also a gradual path for future interest rate increases. On Thursday, the data came out in U.S. indicating the crude stocks fell 5.88 million barrels in a week, while analysts expected them to rise. The news supported the rise in Brent growth of 3.5%. Eurozone is preparing for Christmas holidays, with traders closing their positions. The results of parliamentary elections in Spain were controversial as there is a chance the coalition which opposes the austerity measures may come to power. Together, these factors push the single European currency lower. It is currently correcting down, and the trend is likely to end with the Christmas holidays. This was all for the week. We wish you happy trading and a new year of peace and prosperity. Thank you. See you next week.